Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi. My co-hosts, Emily Parker and Lauren Sluiton, have the day off today, so we are all alone, but we'll definitely get through it. Let's take a look at what's going on in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 29,390, doing a whole lot of nothing. Feels like deja vu day after day, down about 0.5%. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,847, also down about 0.5%, well, 0.4. And let's take a look at the DFX. CoinDesk's DeFi index is at 1,264. That is not the DFI index, is it? I believe we're looking at the... All right. There we go, down. There we are, 124, down about 1%. Let's take a pause for the state of crypto. All right, Bakkt reported the second quarter earnings results yesterday. The crypto trading firm posted a quarterly loss of 19 cents per share on revenue of nearly $348 million. Joining us now to discuss is Bakkt CEO Gavin Michael. Welcome to the show, Gavin.
Hi, Jennifer, Gavin. Good morning. I'm struggling to hear you.
Oh, okay. Well, why don't we do this? Let's take a quick break. Let's solve the audio issue, and we'll be right back.
I'm unable to hear you.
All right, Gavin, can you hear me? That's okay.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Bakkt reported second quarter earnings results yesterday. The crypto trading firm posted a quarterly loss of 19 cents per share on revenue of nearly $348 million. Joining us now to discuss is Bakkt CEO Gavin Michael. Gavin, welcome to the show.
Good morning, Jen. How are you? Thank you.
I'm great. It's a pleasure to have you on. Let's talk about these Q2 results. They included the Apex crypto acquisition that happened back in April. It's now rebranded as Bakkt Crypto Solutions. I have to ask you, I've been wondering this since the earnings call. Any other M&As on the horizon?
So Jen, I think, look, in a market such as we find ourselves, you're always on the lookout for assets and dislocation around the market. We're well positioned given the liquidity in our stock, but nothing planned. Always looking.
Okay, so that's interesting. Nothing planned, but you're planning to expand to 5 different international regions: Latin America, correct, the UK, European Union, Hong Kong, and Australia. We've seen other firms expand in some of these jurisdictions through M&A. So talk to us about what that expansion could look like for you.
Yeah, look, I think in the results we spoke to yesterday, we're demonstrating that we're making strong progress on the priorities that we laid out at the beginning of the year. You know, we're executing around expanding our crypto platform, activating and broadening our network of partners, and then being very prudent in the way we allocate capital. You know, obviously a key part of the activation and expanding is moving into international markets. And yesterday we announced a new partner, Ibex, which is taking us into Latin America. But what we're certainly seeing is in the markets you mentioned, as we start to see regulatory clarity, we're seeing consumer sentiment start to change to become very positive. And many of our partners want to take advantage of that. You know, our entry strategy into these markets is unique. You know, we have a number of partners who are on our platform today who already operate in these markets and are looking to expand and take advantage of the regulatory clarity that they see. So the expansion opportunities are very near term and real for us because we're working with people who are already integrated onto the platform.
I'm curious to get your perspective on Hong Kong. Of course, earlier this year, they announced their new crypto license. A lot of action going on over there. What does Hong Kong look like for you and the firm for the rest of the year?
Look, Jen, I think it's an attractive market. I think as you've seen, the regulators really lay out how crypto should operate. It's not just about bringing regulation to crypto. It's also enabling the ecosystem to actually function. You know, working with traditional financial institutions to be able to get access to payment rails, getting access to depository services, as well as using them as distribution vehicles. So we think the market itself is attractive because of the way the structure has been built.
Do a little comparison here for me. We're talking about these jurisdictions who seemingly have a little bit more friendly or at least more clear regulation than we have over here in North America, more particularly the United States. What's it like working in these other jurisdictions compared to working with regulators over here?
So I think, you know, we have productive discussions with all our regulators. I think, you know, we're closely engaged and involved in helping regulators understand the work in which we're doing, understanding the way in which the regulations affect and impact the way we operate. I think the challenge is that we just don't have that clarity that we're really seeking in terms of what it means to be able to operate in the industry that we find ourselves in. So part of what we think about when we're talking to our regulators, and we see it at different levels, you know, at the state level, New York Department of Financial Services is very clear on how we operate. We operate a BIT license. We operate our NYDFS Bank Trust Charter, which is our custody service, and we understand the operations and how we go to market. As we then start to look at what happens at a federal level, you know, I think the recent findings in the Ripple case are acting as a catalyst to be able to bring the right debate, an informed debate around these assets. You know, we saw movement out of House Financial Services over the last couple of weeks with markups of the bills completed, although they have a long way to go before we see them get signed into law. So the discussions are happening. I think the challenge for us is the pace at which they're operating. And when we compare that then to what we see in jurisdictions where there is absolute clarity, the rules of the road are understood, it really changes the way in which you can operate and run the company.
Let's talk a little bit more about the Ripple case. It felt like when that partial win came out, there was a collective sigh of relief. Now we have the SEC appealing that. As the CEO of Bakkt, how are you watching the Ripple case? How does it actually have an effect anymore? It seems like we're going to have a lot of back and forth until we get any real clarity in that one.
Yeah, I think that's right, Jen. I mean, obviously, we have taken moves through the course of the last several months around listing of different tokens to take them off the platform. We take a number of factors into account when we make those decisions, one of which is obviously the macro regulatory environment. And when we see things like the judgment and then the appeal, there are obviously things we take notice of, we follow because they're important inputs into the process. But right now we're sitting back and watching to see how this evolves.
Yeah, those tokens you brought up, they were Solana, Polygon, and Cardano. What would need to happen for you to relist those?
Look, I think we've always said it's not a one-way door. When we look at the way in which the environment moves and the pace at which it moves, you have to be agile. So taking them off the platform was the right decision in the context of the current environment. As we see that change, if we see key measures change, then of course we revisit those decisions. But I think we've been very clear that none of these are one-way doors. They're all point-in-time judgments based on the sophistication of the market at a particular moment.
I know we spoke a little bit about the back and forth in the Ripple case, but when that partial win was announced, was there any part of you that thought we're going to relist those tokens or we should relist those tokens sometime soon?
I think it's fair to say we took a look.
All right, we'll leave that one there then. I want to ask you about something that was mentioned on the earnings call from your CFO about reducing cash burn. I believe it was between 70 to 80%. Talk to us about what you've done to reduce that cash burn and what will still happen throughout the rest of the year.
So I think, we always said 22 was a build year for us. It was a year where we were investing in the platform, investing to bring the capabilities to market. We're leveraging those investments now in the way we move forward as we continue to activate the ecosystem, as we continue to deliver with the platform. We are obviously being very prudent in the way in which we manage our expense base. And, some of the synergies that you're seeing out of the Apex acquisition are really starting to pay dividends when we look at the cost base of the organization. The acquisition is allowing us to move quickly as well. We signed several new clients this quarter. We also announced, the strategic partnerships with Plaid and with Fireblocks, and we're excited by what they bring to us in terms of improving our go-to-market and giving us, alternate ways to distribute the services. And so what I think you start to see when we look at the expense base is just the efficiencies coming in through the acquisition, as well as the fact that much of what we were building last year is now in the market, and we're turning our attention to the next wave of investments, particularly focused on custody.
And I gotta ask you on that reduction of cash burn question. There were layoffs earlier this year. Any plans for any more reduction in staff moving towards the end of the year?
So, Jen, I think the industry at a whole, we're being very prudent in the way we manage our expense base. We're looking for efficiencies where we can find them. I'm comfortable with where we are right now.
All right, Gavin, thanks very much for joining the show this morning. It was a pleasure having you on.
Thanks, Jen. Pleasure. Thank you.
That was Bakkt CEO Gavin Michael. We're going to take a quick break. And when we come back, we'll take a look at the crypto markets after fresh U.S. economic data was released earlier this morning. Good morning and welcome back to First Mover. Another U.S. inflation report is out. The producer price index rose 0.3% in July, which was hotter than expected. Joining us now to discuss how the crypto markets are reacting is Innovating Capital general partner Anthony Georgiades. Welcome to the show, Anthony. Oh, Anthony, I'm just having a difficult time hearing you. I think you might be muted. The audio gremlins are getting to us this morning. We are going to take a very, very quick break. We're going to sort out Anthony's audio and we'll be right back. Good morning and welcome back to First Mover. Another U.S. inflation report is out. The producer price index rose 0.3% in July, which was hotter than expected. Joining us now to discuss how the crypto markets are reacting is Innovating Capital general partner Anthony Georgiades. Welcome to the show, Anthony.
Thanks for having me. Great to be here.
Awesome to have you here. I just said we're going to take a look at how the crypto markets are reacting, but we took a look at a few charts at the beginning of the show, and it looks like they are relatively unmoved. Are you surprised to see that this morning?
It is a little bit interesting, when you look at futures right now in the equities market. NASDAQ looks like it's down almost 70 basis points. S&P's down about 25, 30 basis points. And I think the data between yesterday and today starts to really kind of signal fears that there might not necessarily be so much of a soft economic landing here, and that potentially the guidance and certainty in terms of where terminal rates will shake out on a monetary policy perspective is a little uneasy now, just given the fact that it does seem that costs more than anything are going to stay where they are for quite some time. On the digital asset side, it's fascinating to see that the markets are relatively unchanged and haven't necessarily responded to this as negatively. I think that has to do more with the fact that the digital asset market has largely priced in a lot of the monetary policy fears and uncertainty in terminal rates, and we probably would have saw much more of a movement upwards given where data came in.
Do you think we're going to see another rate hike?
I do think that the guidance from terminal rates in the range of 500 to 600 basis points will stay where it is. And I think the bigger fear of what we saw today is there's still more work to do. These are not data points that suggest by any means that we are at the point in time where both the current environment in terms of interest rates, as well as the duration in which rates have been hiked, has been enough to bring costs down. Economics are starting to caution that housing costs are unlikely to help drop dramatically moving forward. You see certain depressed prices in areas, but those aren't necessarily expected to keep dropping if you look at things like medical care or airline fares or things like that. So while future pricing, may suggest that we won't necessarily see a raise in interest rates, it isn't necessarily suggesting the converse might be true, in which we would see maybe a cut in rates either. And I think that's what the market's actually more so ascertaining right now.
All right, let's transition back to the crypto markets and talk about Matrixport's Bitcoin Greed and Fear Index. It's suggesting that there could be a bull revival in Bitcoin. What's your short-term outlook on Bitcoin? What might we see it do leading up, in the second half of the year?
There's really three large catalysts that we're mindful to as it pertains to the Bitcoin price as well as the broader digital asset pricing in the market. First and foremost, monetary policy, which we just touched on. Second to that really has to do with some of the broader global currency risk and fears. Hyperinflation continuing to spiral out of control. Some of the de-dollarization that we saw over the last several months and earlier this year with the banking debacle. That's really played a significant role in revitalizing this sort of thesis around Bitcoin and certain digital assets behaving more like a safe haven commodity and overall idiosyncratic asset to acquire that doesn't necessarily have those same features as monetary policy-based currencies around the world. The third is really on a regulatory side. Obviously, a bill that's going through Congress right now that really sets the stage to eliminate what we've seen as enforcement-centric regulation by certain legislators in the US and moving more towards having clear-cut guidelines. That will pave the way for both institutional adoption, retail adoption, day-to-day consumption and activity of digital assets, as well as really propelling some of the innovation into the markets. We're starting to see big players, Schwab, BlackRock, you name it, that are starting to really jump into the space with some of that clear guideline that's been established.
Yeah, speaking of catalysts and hype, Matrixport also predicts that the SEC is going to approve several spot Bitcoin ETFs. What's your take on the hype around these? Do you think we're going to see several approvals before the end of the year?
Mm-hmm. It's always tough to really rationalize how much of certain of this activity is adequately priced into the market and what the incremental impact would be, in terms of pricing in the news versus the actual reality of things. I think generally speaking, setting up for spot-based assets and derivatives versus ones in the past that were purely cash settled is extremely important just in terms of the overall demand, and really sets the stage for global adoption of Bitcoin at scale, to the extent that we're already seeing in certain emerging economies and established economies across the world, whether it's Argentina or Turkey.
And really quickly, I want to get your thoughts here on altcoins. We had a report on CoinDesk that says a bullish inverse head and shoulders pattern is forming. What do you think about altcoins? Do you think we're going to see them break out?
I don't necessarily always, suggest that users trade off of pure technical patterns, particularly in a market that has only been around for a decade. And how many, technical patterns are we able to really leverage in that sort of analysis and speculation? I would say from the altcoin perspective overall, there are a ton of fundamentals. And I think that what we've seen is, the baby's really gotten thrown out with the bathwater over the last couple of years, and it's led to a lot of suppression in pricing. And I do think that there are certain altcoins out there that will really be fundamental players in the broader Web3 ecosystem over the next few years that do have some intrinsic value behind them. So I wouldn't necessarily be surprised if the market, especially as those catalysts that we talked about start to really play out, starts to really reprice certain of these assets. And, of course, you'll see overall systematic movement in the market. But I do think certain key players will really be large beneficiaries of that.
All right, Anthony, we're going to have to leave it there. Thanks for joining the show, and I hope you have a great weekend.
You as well. Thank you.
That was Innovating Capital General Partner Anthony Georgiades. We're going to take a quick break. When we come back, could FTX founder Sam Bankman-Fried go to jail before his trial? We'll discuss the latest right after this. Good morning and welcome back to First Mover. Our next guest entered Web3 during the NFT boom of 2021. He led Web3 at Salesforce, and now he sees smart tokens as a gateway for companies to create new digital ownership opportunities. Joining us now to discuss is Smart Tokens Lab Chief Strategy Officer Mathew Sweezey. Welcome to the show, Mathew.
Hey, so good to be here.
Great to have you here. It is Smart Token Labs. Sorry, I mixed up the S's there in my intro, but let's talk about smart tokens. What are they? Why are they so different? Why are you so excited about them?
Yeah, so I think if we take this from a high level, right, we've seen tokens as currencies and we've seen tokens as collectibles with NFTs and with fungible tokens. And this has really left us in a place where we're looking at through the lens of DeFi. Really, for us to get to the next era, we really have to see tokens as something more than just currencies and collectibles and see them as experiences. And that's really what a smart token allows for. So it's really powered by ERC 5169, which Smart Token Labs put forth. And it allows for a token to carry executable scripts where they can now become applications themselves, not requiring dApps. Let me give you a really easy example. So let's say that you were going to sign up to be an Uber driver and you had to prove that you had insurance. Well, you could connect your NFT to show that you had insurance if it was a tokenized insurance pass. Now, if that was a smart token, you can connect that to Uber's website. They can prove that you have that insurance, but they could also then say, hey, listen, we noticed that you don't have rideshare coverage. Now, this is where things get interesting with the smart token. Because they are an experience and we can interact with them directly, I can now interact with my insurance company through that token and up my insurance in that moment. And really what we start to see is composable and portable business services as the new digital primitive. And that's really what smart tokens are.
I think your background is really interesting. You know, in the intro, we talked about you getting into the space during the NFT boom of 2021. You were then at Salesforce working in Web3, and now you are kind of leading the charge here with smart tokens. What was so interesting to you about the space, and particularly with NFTs in 2021?
Yeah, so I've been following this space for a long time, and really had only seen, Web3 through the lens of blockchains and Bitcoin, right? Currencies. And then once I saw NFTs, this idea of we can now start to have experiences, and that's what really I focused on, was this notion of how to, technology change the relationship between businesses and consumers. And as I was, co-leading strategy at the Web3 studio at Salesforce, what I saw was a lot of CEOs believed in Web3. They believed in decentralization. They believe in these ideas, but what they were presented with at the time was currencies and collectibles. And those presented too much risk for them, right? There's too much legal risk for a lot of companies to create tokens. At least that's what their legal departments are telling them. And then the functionality really wasn't there, right? They didn't see how a currency or collectible was really going to help them create a better consumer experience or really improve business efficiencies. And that's what they're waiting on. And that's why I'm so excited to join Smart Token Labs, is I believe smart tokens to be that key to enable businesses to really create these next era digital primitives, the ability to have a radical new digital experience, as well as then create business efficiencies that they're looking for.
Are there regulatory hurdles on the horizon for those who are working with smart tokens?
No, I think that's one of the beauties here, right? So a smart token can be on-chain and off-chain. Now, this is a hard concept for a lot of people to understand, but Web3 does not equal blockchain. It's an ethos of decentralization and individual ownership of data. So we can start to expand the aperture past just on-chain, and we can start to look at off-chain primitives that are still Web3 primitives, such as attestations. We can start to then use technology that bypasses all of the fears that these companies have. Like, here's a really big fear that a lot of companies have. They don't want to put their entire customer database in a public record, right? So they don't want to issue an NFT to everybody. They don't want on-chain tokens because they don't want their competitors to come in and do a vampire attack. So when we have the ability to start to think about off-chain tokens, we can bypass the notion of regulation because they're not on-chain, they're not a security. Then we can start to expand, and we can then really get to those experiences that these companies are looking for.
Given your background, I got to ask you what you make of PayPal's recent announcement when it comes to stable coins. What do you think that's going to do for adoption and for getting bigger, more mainstream financial and consumer brands into the space?
I mean, I think the easier we can make it for somebody to get a token in their hand, the better. I mean, I'm still worried that my mother's not going to crypto. I mean, it doesn't matter if PayPal makes a crypto coin; she's not going to crypto. I think what's really going to drive mass adoption is when we can move past DeFi for the individual consumer, can start to see how tokens create better experiences in their daily lives. There's a lot of fear for the regular individual to touch crypto at all, and so I think we can start to expand the aperture of tokenization past securitization and see it through the lens of smart tokens and better experiences. I think that is going to drive mass adoption.
All right. And now let's talk. I want to hear from you. What are the challenges with smart tokens? We talk so much about how it's so difficult to get users into the space, to educate them. Now we have this whole new concept that brings us away from NFTs. How are you thinking about educating people on smart tokens and making that differentiation between NFTs and smart tokens?
That's a great question. So there's a couple of things. First off is, if you want to experience a smart token firsthand, you can go to smartlayer.network right now and grab our smart pass. Over 500,000 people have done it in the past 3 weeks. And that allows you to really experience what an off-chain token can do. And you can follow along with us for the next coming months as we will then release new quests to really showcase that experience firsthand. But the biggest challenge we have right now with smart tokens is people have the idea that a token is security. A token is securitization. They don't understand the concept of token as an experience. experience. And so that's what we're really educating people on is ERC 5169, what that enables a token to do. And then when we start to then think of tokens as experiences, tokens can be anything from receipts to, attestation of an airline ticket. And this is one of my favorite examples is helping people understand what we mean by tokens as a portable and composable business service. So take the idea of an airline ticket. You get an airline ticket and we, issue a smart token along with that ticket. And that smart token is going to say all of the metadata about your flight, what status you're flying, when you're flying, how you're flying. Now, if we then start to think about this as a new digital primitive, now follow through that travel experience. We're now going to go book a car and a hotel. I can plug that smart token directly into those websites and it can automatically read that data. And it can see that I'm a premium flyer. And this is where things start to get fun. Is now Airbnb could say, if you book through me, I'll automatically upgrade your flight. And I can do that directly through the token without having to build an API back and forth to the different airlines. Or we can say further down the travel experience, when my flight is delayed, because that token is the central integration point for that experience, all parties can be notified of my delay and then things can be rebooked. And once we then start to see that as a new experience and not just a currency or a collectible, to me, that's the biggest hurdle is really explaining that to the market.
All right, Mathew, we're going to have to leave it there. Thanks so much for joining the show this morning.
Thanks for having me.
That was Smart Token Labs Chief Strategy Officer, Mathew Sweezey. All right, turning now to Sam Bankman-Fried, who is set to appear at a hearing later today for a judge to decide whether the disgraced founder of FTX is going to jail before his trial in October. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning. Happy Friday.
Happy Friday. I am looking forward to the weekend, but I bet Sam Bankman-Fried is probably, I don't know, probably just trying to get through the day today. Talk to us about what's going on, what could happen at the hearing.
Yeah, so at 2 p.m. Eastern, or a little over 4 hours from now, Sam Bankman-Fried is due back in court to discuss a motion, rather his legal team will discuss a motion to put him in jail prior to his trial in October. This is, of course, we've talked about this before, because he allegedly leaked Carolyn Ellison, the former Alameda Research CEO, and his ex-girlfriend, his private diary to the New York Times. Prosecutors seem to have had enough. The judge, frankly, also seems to be a little bit tired of some of the things he's been asked to rule on. So we'll see if the defense has enough on their side today to keep him out of jail ahead of trial.
All right. And how's it going to impact the upcoming trial, if at all?
So if you listen to the defense, they claim that having him in jail will make it more difficult to prepare for trial. They say that there's a lot of stuff that he needs, a computer to access, a lot of files that are online. If he's in jail, he's going to have to, he'll only be able to access these documents and such during visiting hours if he leaves. Basically, they're saying, it's going to be more inconvenient for them. The prosecution contends that, that's not been an issue for any of the other individuals who are at the detention center, that, he will have the ability to prepare for trial the same as anyone else. Basically, they're saying, having to prepare for defense is not a get out of jail free card, quote. So they obviously don't seem to think there will be much. I think we'll have to wait and see. It probably comes down to, what all they plan to introduce as far as witnesses and such go. We'll have a bit more information on that by the end of the day, Monday.
Given the information that's out there, how likely is it that he actually goes to jail until October?
So I asked a number of attorneys about this, and none of them were really willing to give me like a concrete estimate. But in the words of some of them, they think that based on the judge's statements, based on the prosecution statements, that, the judge in particular, who has basically all the discretion here, seems to be really tired of coming back to, Bankman-Fried and having to, modify bail terms or address these stated lapses. This is not the first time. Remember, we've seen prosecutors try to modify Bankman-Fried's bond conditions previously for things like reaching out to FTX U.S. General Counsel Ryan Miller for using a VPN to supposedly watch the Super Bowl, according to his defense team. So on multiple occasions now, the judge has questioned why he's being asked to allow Bankman-Fried back, to his parents' house to serve out the pretrial time under house arrest, essentially. So if we look at that, the judge does not seem to have a high bar of patience for Mr. Bankman-Fried right now, and we can let our audience kind of draw their own conclusions from there. But of course, nothing's guaranteed. We'll see what happens today.
All right, we'll have to wait and see what happens there. I want to switch quickly to another story and get your thoughts. Crypto exchange Bittrex has agreed to pay the SEC a $24 million fine. Talk to us about what happened there.
Yeah, so this was the SEC suing Bittrex Global, and Bittrex US CEO Bill Shahara earlier this year in April, alleging they operate as an unregistered broker-dealer, unregistered national securities exchange, and an unregistered clearinghouse, allowing U.S. individuals access to, quote, crypto asset securities. In the terms of the settlement, Bittrex and Bittrex Global are neither, agreeing nor denying the allegations. They're paying a total of $24 million in fines, penalties, etc., and apparently closing the matter. Bittrex US, which did file for bankruptcy in May, has, I think, 2 weeks to provide a liquidation plan, and 2 months to provide a liquidation plan, and 90 days after that to pay back the SEC. I don't know. Honestly, as far as the crypto industry is concerned, this seems like a pretty solid settlement. The SEC is going to say, we allege that they did all these activities that they are also, by the way, alleging Coinbase and Binance US do. They're going to say, we alleged it. They didn't fight back.
All right. I believe we lost Nick, but thank you to Nick. We hope Nick has a great weekend. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Now, that's it for our Friday show. Before we go, we have a tweet of the day that takes us down memory lane. Today is the 3-year anniversary of MicroStrategy's Bitcoin purchase announcement. MicroStrategy Executive Chairman Michael Saylor posted on X, formerly known as Twitter, about the company adopting Bitcoin as its primary treasury reserve asset, purchasing over 21,000 Bitcoin for $250 million, or roughly $11,653 per Bitcoin. Always nice to take a little walk down memory lane and see how MicroStrategy is doing. That's it for First Mover. We hope you have a great weekend. Thank you for being with us today. I'm Jen Sanasi. First Mover returns Monday at 9 a.m. Eastern Time. In the meantime, you can catch The Hash today at noon. You're watching CoinDesk TV.